we are max long. And so we've taken all of our excess cash and we've been buying Bitcoin from 90,000 all the way down to 74,000. And so we're not buying anything else. All we'll be doing now is waiting for alt season to come around and sort of rejigging in the portfolio to maybe go into some high quality alts. But we are at maximum crypto exposure. I believe that this bull market will now continue, and 74,500 was the low for this particular part of the cycle. I think people have not focused on what he's been saying for the last 12 years. He campaigned in 2016 on the Main Street getting a bad deal, whatever you want to classify that is. His base, people who don't have college education, lost their manufacturing jobs over the past 50 years, and he is their champion and returned them. Whether or not you believe that, doesn't matter. That's the rhetoric. And so he started to trade war with China in 2018, kind of petered off a bit, and then he revamped it in 2024 and 2025 with these tariffs, right? And so at the end of the day, we're realigning the global supply chains and finance and capital. And so America needs to go from a deficit to a neutral country, which basically means China has to reverse those flows. And that's what we're seeing. Now, the speed and the pace and how fast it happens, that's the question. People were a bit surprised with how hard he went at tariffs. But make no mistake, this is just a symptom of the same decoupling disease that's been going on, for many, many years. And it's a bipartisan effort. It's not just Trump. Biden also continued this China bashing and sort of decoupling. So again, it doesn't matter. They'll be what they be. Absolutely. And I think at the end of the day, what people need to understand is that Trump and Besson and globally policymakers cannot handle volatility. They're structurally short volatility. So when you have bond volatility rising as it did in early April after the Trump tariffs, they swung into immediate action. They tempered their, how great they were big are going to go on tariffs. And we saw Bitcoin rally aggressively. Stocks have followed. I think NASDAQ was up on the month, even after all that happened, right? So at the end of the day, we know what the response is. Response is money printing. We know what the triggers. It's bond market volatility. And so next time this happens, and guess what? Trump's going to return back to maximalist position on tariffs to get what he wants from the other allies or even China. And so we're going to have a repeat of what happened in April. But this next time, I don't think Bitcoin trades down with stocks. I think Bitcoin just says, oh, okay, well, I know that they're going to have to print more money because this divorce is going to be very expensive. So I'm just going to keep rallying. And I don't care if NASDAQ's down 10 and 20%. But I think the new narrative is going to be fundamental season. What's fundamental season? It's real users who pay real money for real service, right? And so there's very few projects that actually do that. And so that's what the products we're looking for. We're big in Pendle, best sort of fixed income trading platform, is profitable as a protocol. I've been obviously very vocal about EtherFi. They just launched their EtherFi cash card. They're going to bring millions of people into the crypto ecosystem by allowing them to spend stables, borrow against their staked ETH, using the Visa network. And they're going to build a new neobank. Again, customers, cash flow, profit goes to token holders. These are the types of things that we're looking for. If your token is some high FTV, low float thing that went down 95% in the last, 2023, 2024, and you have no traction, you're not getting levitated. There'll be a new narrative that people are going to ape into, and it's not going to be that. We're going to have to return to like actual cash flows, and there's probably less than 50 projects that actually have real cash flows. So, if this is public knowledge, Maelstrom participated in the UPXI offering. They are now buying Solana as a sort of a treasury function. So, we are long that stock. So we're participating in this. This is essentially just TradFi financial engineering games, right? There's a particular set of investors who, for whatever reason, cannot or will not buy underlying coin. They can only buy listed equities. And so there are some financial engineers who said, okay, well, I have this buyer who wants crypto but can't buy crypto. So I'm going to put it in a wrapper that they can understand. And then you have these products trading at premiums. But if you can buy Solana, Bitcoin, ETH in the real markets, why would you trade these products? It doesn't make any sense. But that's the trade that we're betting on. Will this get out of hand? There's too much leverage. I don't know, but when the music's playing, I'm going to dance. No, because I can buy Bitcoin. If you couldn't buy Bitcoin, then you have the Bitcoin ETF. You're basically trading the premium or discount of this thing. It's a little bit more complicated than just like buying Bitcoin. I'm not exactly sure that's suitable for a lot of people, but again, depending on what your fiduciary restrictions are, that might be all you can have. And that's what Michael Saylor is betting on. It's like there's this group of people that have got a lot of money, but because of dumb rules, they can only buy one thing. So he's going to satisfy them. We're going to honor and upwards. I think that when governments buy things, they buy things for political reasons. And so if you get really excited when they're buying it, then you get really scared when they're selling it. And they're going to go both ways. And so I think that we shouldn't really get too enthusiastic about this. It's an open protocol. If they want to buy it, great. That's what it's there for. Do I really think we should be lobbying as expending political capital to buy Bitcoin? No, it's spending political capital to make sure that there's freedom of information, that people can code without fear of going to jail or retribution. That's what I think we should spend our energy on, not whether or not XYZ government is going to buy Bitcoin with their sovereign funds.
Any Bitcoin, certainly Bitcoin Maxi, any Bitcoin or ETH or Solana focused person. I mean, as you know, the space can, carve itself off into its little groups. And the XRP army has been a thing for quite a few years. And I think there are quite a few people out there who are not part of that army who sort of don't believe in, XRP, mostly because it's centralized. And I think people have problems with the way that it was distributed over the years. But I would say, the one very impressive thing about XRP is just how long it's lasted, how many times it's come under attack. Do you remember, was it last year or 2 years ago, Gensler banned, he basically attacked them and then they got taken off all of the exchanges? They were actually pulled off. XRP was pulled off the exchanges. I think it stayed on Kraken. It's one of my portfolio companies, and maybe Uphold as well. I can't remember if it was one or two, and then they bounced back. And I think that Ripple, it's this Lindy effect. The longer it seems to exist, the more sort of strength it gathers, the greater the network effect is. And so I think it's pretty impressive. The first trades I did in cryptocurrency in 2012 were in Bitcoin and in Ripple at the time, through Uphold. At the time it was called BitReserve. So I understand people have different opinions about the fact that it's not decentralized. And I think people also question whether, how much is it really used in payments? And I would argue, and I think, and again, I haven't done enough work on this, and I am by no means a big XRP guy, but I do respect it for its ability to survive. And I think what it's turned itself into, the company, Ripple, has turned itself into, in a way, a holding company, a conglomerate of assets within the digital asset ecosystem. So I think there's value there, and I think there probably are quite a few people anticipating the XRP ETF, lasting also because it's made in America now, right? That's another thing we know with this administration. If it's made in America. So I think, and you have to, take your hat off to Brad Garlinghouse for having gotten involved with Trump and still very involved, and I think has done a lot of hard work for the space itself, doing battle with the previous SEC administration. He's been a pretty strong advocate for the space itself overall.
What made you interested in XRP all those years ago?
Well, it wasn't anything more than that was what was available, and it was super duper liquid. My gold company that I'd founded called GBI, Gold Bullion International, we were the first place in the world where you could buy or sell gold to buy or sell Bitcoin or Ripple. And it was done on the BitReserve platform, which today is Uphold, the Uphold wallet. In fact, you can still buy gold to sell Ripple or the opposite on Uphold. And it's still my company that's behind that. So it was extremely liquid. And I remember having a lot of fun with not a lot of money, just, driving the price in the liquid markets up. It was, it was trading at 1/10 of 1 cent. So, getting it to 2/10 of 1 cent. Today it's $2, right? I don't know. It was liquid, and it had the interface was actually really nice. You could see all of the amounts of Ripple that were offered, and you could just buy pretty much as much as you wanted at that time. It was so it was more of an experimental thing at the time. Yeah, I wasn't thinking long-term hold, I'm going to make 1,000x. No, there was no XRP army. I would just say the motto for me, at least the one that I tell my analysts, is it's never too late to do the right thing, which means just because you didn't buy it at 1/10 1 cent doesn't mean you couldn't buy it at 1 cent or 2 cents or 10 cents. Meaning, if you believe in something, never give up on it. I wasn't sure I really understood Ripple, so it wasn't so much that I could believe in it in a way, right? It was hard for me to understand how it worked and the dynamic, and the balance sheet was a little opaque, but yes. So we digressed a little bit.
Welcome, everyone, to the Market Chronicles. This is episode 18.
Great to be here.
Today, we're doing a quick, focused, deep dive into some recent commentary from, crypto heavyweights Arthur Hayes and Dan Tapiero.
Two very interesting voices in the space, for sure.
Absolutely. And hey, if you happen to be watching this on YouTube, go ahead and hit that subscribe button for more analysis like this.
Definitely worth it.
So we've got excerpts from a discussion they had recently. Our mission today:
to pull out the key insights. Yeah. Market trends, potential plays, the narratives they see driving things, all condensed.
Exactly. Let's jump right in. Arthur Hayes, what's his current thinking on Bitcoin?
Okay, so Hayes is very upfront about being max long Bitcoin. Says he bought quite a bit between, $90,000 and $74,000.
Wow. Okay. So a significant position. What's the plan now?
His strategy now is basically holding that Bitcoin and waiting for what he calls alt season.
Right. The potential surge in altcoins.
Yeah. And when that happens, he plans to rebalance, move some capital into, what he sees as high quality alt projects.
And his overall market view, still bullish.
Definitely.
Right.
He believes the bull market isn't over, and that $74,500 was basically the recent bottom.
Interesting. He also talked quite a bit about macro factors, didn't he? Specifically Trump's policies.
He did. Big focus there. He's referencing Trump's trade rhetoric from the 2016 campaign, the tariffs back in 2018.
And looking ahead to potential moves in 2024, 2025.
Exactly. He sees these trade policies as, major drivers for reshaping global supply chains and shifting financial flows.
How so? What's the mechanism there?
His argument is basically that the U.S. needs to move from its current deficit situation towards something more neutral.
Okay.
And that shift inevitably impairs capital flows, especially thinking about China.
So the tariffs aren't just standalone things in his view?
Not at all. He sees them more as a symptom, a symptom of this larger bipartisan push towards decoupling the U.S. and Chinese economies.
Right, that decoupling narrative. And he had this interesting point about volatility.
Yeah, this is key to his thinking. He says policymakers, Trump included, are kind of structurally short volatility.
Structurally short volatility, meaning they don't want it, especially in bonds.
Precisely, particularly bond market volatility. And his analysis is that when bond volatility spikes, what happens?
Monetary easing. The central banks step in.
Bingo. You get the money printing, as people call it. He expects this cycle to repeat. Tariffs escalate, volatility spikes, monetary policy responds.
And how does Bitcoin fit into this cycle according to Hayes?
This is where it gets really interesting. He predicts that during these future volatility spikes, Bitcoin will actually decouple from traditional markets like the NASDAQ.
Decouple? Why?
His thinking is that the need for more money printing, because this whole global financial shift, this expensive divorce, as he puts it, is costly, will just reinforce Bitcoin's value as, a non-state alternative.
Makes sense. He also talked about a shift within crypto itself, didn't he? Something about a fundamental season.
Yes, absolutely. A fundamental season. He believes the market's focus is moving, or should be moving, towards projects with, actual users.
Real people paying real money for real services.
Exactly. Not just hype. He gave some examples, too.
Like what?
Pendle, which is for fixed income trading in DeFi, and Ether.fi.
Oh yeah, EtherFi, with their plans for the cash card, spending stablecoins, borrowing against staked ETH.
Right. He highlighted their focus on getting customers, generating actual cash flow, and importantly, returning value or profit to token holders. That kind of thing.
So he's warning against certain types of tokens then?
Yeah, definitely. He's cautious about tokens with, super high, fully diluted valuations, but tiny circulating supplies and basically no real traction or users yet.
So substance over speculation is the idea.
Pretty much.
Sure.
He thinks new narratives will pop up, sure, but ultimately it's going to come back to valuing actual cash flows. He even estimated fewer than 50 projects really fit that bill right now.
Fewer than 50. Wow. Okay, shifting gears slightly. What about traditional finance getting involved? Hayes mentioned Maelstrom.
Yeah, Maelstrom participating in that UPXI offering and also buying Solana for their treasury.
He called these setups tri-financial engineering games, right?
He did.
Yeah.
Basically listed companies providing a way for certain investors, maybe those restricted from buying crypto directly, to get exposure.
Like a wrapped exposure.
Exactly. But he questions the logic for people who can buy the underlying asset directly. Like, why trade a premiumized product if you can just buy Solana or Bitcoin or ETH?
So who are these products for then?
He points to someone like Michael Saylor and MicroStrategy as betting on that pool of institutional money that is restricted, the money that can only invest through certain regulated vehicles.
Interesting take. Okay, one more from Hayes. Government adoption of Bitcoin. Good news or bad news?
He's actually quite cautious here. He suggests governments buy Bitcoin mainly for political reasons, not necessarily economic ones.
Which could mean volatility.
Yeah, potential volatility both when they buy and if they decide to sell. So he advises against getting overly excited about government adoption.
What should the focus be instead, according to him?
Protecting freedom of information and supporting the actual builders and innovators in crypto rather than spending energy lobbying governments to buy Bitcoin.
Got it. Okay, let's pivot to Dan Tapiero. He spent some time talking about XRP or Ripple.
He did. And he straight up acknowledged it's a divisive asset in the crypto community.
Yeah, the centralization concerns, the initial distribution, it's always been controversial.
Right. But Tapiero highlighted what he called XRP's Lindy effect.
Lindy effect, meaning its resilience, its ability to stick around.
Exactly. How it survived despite, regulatory attacks like from Gensler, getting delisted from exchanges and then bouncing back.
He even mentioned his own history with it.
Yeah, he shared that he actually traded XRP way back in 2012 on BitReserve, which is now Uphold, traded it right alongside Bitcoin back then.
Wow, 2012, that's early.
Very early. And he said he respects its survival and how Ripple itself has kind of evolved into more of a holding company structure within the digital asset world.
Did he mention the potential for an ETF?
He did anticipate a potential XRP ETF down the line. And he also mentioned Ripple's sort of Made in America angle and Brad Garlinghouse being active politically advocating for the space.
Interesting. Why was Tapiero even interested in XRP back in 2012? Was it the tech?
He was quite open about this. It wasn't really a deep dive into the tech back then. It was more practical.
How so?
It was just readily available and highly liquid on that BitReserve platform. Simple as that, really.
Availability and liquidity.
Yeah. In fact, his gold company at the time, GBI Gold Bullion International, was apparently the first one on that platform to let people buy or sell gold using either Bitcoin or Ripple.
Huh. So he was experimenting with it.
Pretty much. He talked about how low the price was, how volatile it was back then. Said his initial use was more exploratory. He didn't have a deep grasp of how it all worked initially.
Did he offer any broader investment takeaways from that experience?
He shared a kind of personal motto for analysts. It's never too late to do the right thing.
Applied to investing, meaning?
Meaning, even if you missed something early on or maybe didn't fully understand it, it's not necessarily too late to reassess and potentially invest if the thesis makes sense now. But he also admitted Ripple's inner workings and balance sheet were pretty opaque back then.
Okay, so wrapping this up quickly, we've got Hayes with this macro-driven, fundamentals-focused, cautious optimism.
Right, looking for real cash flow, watching the bond market, waiting for alt season.
And then Tapiero highlighting the sheer resilience of some older assets like XRP, despite all the controversy, a different kind of perspective.
Yeah, the Lindy effect in action, acknowledging its survival power.
So putting these together, it leaves a really interesting question for you, the listener, to think about.
Yeah. How do you weigh these different angles? Hayes' focus on fundamentals and macro versus Tapiero's point about resilience.
Exactly. How are you evaluating the long-term potential of different crypto assets? And this interplay between TradFi and digital assets keeps coming up too.
And specifically thinking about Hayes' fundamental season, which projects actually stand out to you as having that real substance he's talking about?
Lots to chew on there. We definitely encourage you to dig deeper into these specific projects and the macro trends we touched on.
For sure.
All right, that's our rapid deep dive for this edition of the Market Chronicles. Thanks for tuning in.
See you next time.